I lost 4.7 lakhs rupees in the market crash last week. Sounds terrifying, right? But here is the twist. I am actually excited. No, seriously. In the next 8 minutes, I'm going to explain why market fear, like we are seeing right now, is exactly how some of the wealthiest people in the history build their fortunes. In this video, I'll walk you through 3-step framework that I'm currently using to turn this 18% market crash into one of the best investment that I have made till now. I'll also share that one particular mistake that 99% of people make during market crashes that you will need to avoid to build your fortune. So make sure you watch this video till then. And if we are meeting for the first time, my name is Omkar. I'm currently working as a data engineer. And to get more videos like this onto your feed for free, please make sure you subscribe to our channel. Before we get into crash itself, let's quickly look at the two economic developments that most investors are missing right now. First, inflation in India dropped to 4.31% in January 25, and as you can see, it is lowest since August 24. This is important because it signals that prices are stabilizing. And the second key economic development was RBI announced cut in interest rates for the first time in the 5 years by 25 basis points to 6.25%. Now, I don't want to spend more time to make you understand what is inflation, interest rates, basis points, and repo rate. I will create more videos on such topics, so make sure to subscribe to our channel. Are you searching for a next big job opportunity but only getting rejection emails? Or for worse, your applications aren't even making to the interview stage? Because in the ATS stage, only 25% of application gets selected. But from now on, you don't have to get worried because I have got you covered with the two game-changing sessions. First one is the resume foundation session and second one is a job mastery session. But why should you believe in me? See my LinkedIn and Naukri profile because both of them are getting filled with recruiters' mails, messages for the next big opportunity. You just have to fill out the form given below in the description. So historically, we have seen that when interest rates gets cut, markets tend to perform well. I looked at the 6 rate cutting cycles and on average, Sensex delivered an 18.7% return. So even if the market is down now, we might be at the start of something bigger. And as Warren Buffett says, be fearful when others are greedy and greedy when others are fearful. This could be very well be one of those moments. So the basic question come here is why India still bearish about these two macroeconomic developments. Here are the 5 key factors by which our market is still falling. Slowing GDP growth. India's economic growth slowed to 6.2 in quarter 3 of a 25, down from 9.5% last year. FII outflows. Foreign institutional investor pulled out around 1.13 lakh crore from Indian equities in 2025 alone. And this has had a clear impact on our Indian stock market. Global trade tension. There is a lot of uncertainty with the US increasing tariffs on imports from Canada, Mexico, the EU, and the China. Tech sector struggles. After Nvidia's disappointing earnings, we have seen a sell-off in tech stocks, which has hurt Indian IT companies as well. Dollar strength. The US dollar index hit 107.35, putting pressure on emerging markets like India, and hence it makes investing India costly for foreign institutional investors. Despite market falling, Parag Parikh, which is one of our top India's fund houses, sitting on a 20% of cash. As per January interview, that 20% is about 17,400 crore rupees of their 87,000 crore rupees portfolio. And reason of sitting on a cash and not investing in the market was they would rather wait and find the right valuation than deploy their entire portfolio. And please note that this interview was done on January and currently we are in the March. And in this 2 months, we have seen 9% more drop in the stock market. Now, I strongly believe that this could be the good time to start building our position in a stock market. But I'm not still deploying all my cash in a one go. And here is how I'm navigating with this 3-step framework in this market correction. Tranced investing. Tranced investing means instead of investing all at once, we will divide our current capital, maybe for example 5, and we'll deploy these 5 portions into market after certain intervals. For example, if I have 1 lakh capital in a cash with me, now here I will apply tranced investing where I will divide this 1 lakh into 5 equal portions. Each portion is about 20,000 and these 20,000 I'll invest into certain intervals. And this is how portion by portion, step by step, I'm deploying all my capital into the market. And by following this method, you are averaging your stocks. That means you are buying new lows. And also, this helps me avoid stress of market timing and benefits me from dollar cost averaging if prices continue to fall. Now, the second step in this framework is to identify quality at a reasonable price. This is not a recommended analysis, but this is how I will buy the companies who follow these three key parameters. First one is high ROCE, at least above 15%. Second, low debt, below 0.5%. And third is positive free cash flow growth. And you have to understand this, even in the market downturns, quality companies still be undervalued and offer great opportunities for buy. Third and the last step in the framework, buying the watch list. I've been tracking 10 to 15 companies in last couple of months if their stock pricing gets undervalued, and 7 to 8 companies are closer to my target prices, and hence I'm ready to start buying them systematically with the following traversed investing. Now there is one critical mistake that I see investors making repeatedly during market correction: panic selling. And believe me, this is the absolute worst thing you can do. Many investors start selling their portfolios, their positions in the stocks once markets get corrected. And in the most of cases, investor book losses, which doesn't make sense if that company fundamental is good, even the stock prices is falling. If you have invested in a quality companies with strong fundamentals, lower stock prices should be seen as an opportunity, not a reason to sell. At the end, the market will recover as it always has. Reason why foreign institutional investors are selling their stakes in the Indian market because they are finding good opportunity outside. But here you are selling your stake, booking losses and just sitting on a cash, which doesn't make a sense. Looking back at India's market history provides more context to it. We have seen 2008 financial crisis. The Sensex fell nearly 60%. In this time, investors who have hedged their position or built a new position in the market have seen 20% return in a 1 year. And the near-time crisis which happened in the year 2020, we have seen around 38% market crash. But the investors who have invested systematically in this period have doubled their portfolios in the next 18 months. But let me be clear, I'm not saying or claiming that market has a bottom or stocks won't fall further. Believe me, anyone on internet who claims to know exact bottom of a market is likely to trying to sell you something. But here I'm not. The intent behind making this video was to make you aware about the two macroeconomic development that happened in India in recent times. Why stock market is falling, I have given already 5 key reasons. The 3 key step framework that I'll be following to build my position in a stock market in coming months. And the one biggest mistake that investor makes in the market correction, that is panic selling, that you will need to avoid, and which I have delivered already. And that's all for this video. I hope this video was helpful for you. If yes, then please give it a thumbs up. Subscribe to our channel if you haven't already. This will bring new videos like this onto your feed for free. And do share this video with someone who needs to hear this. And let me know in the comments if you're buying the dip or waiting for further drop. And thanks for watching this video till end. I hope to see you in the next video. Till then, bye.